Good morning and thank you for joining us today. Risk appetite faded in November as investors appeared to be securing gains after a strong year for equities. The MSCI World still managed to climb higher on the back of the positive returns delivered by US and Japanese indices, but European and EM indices were down and high-yield credit saw its spreads widening markedly during the month. In the hedge fund space, CTAs outperformed on the back of their short USD positions and long European fixed income positions. The Lyxor CTA Broad Index was up 0.8%, while the Lyxor Hedge Fund Index was up 0.3% only. Global macro and long-short equity strategies also delivered positive returns, while event-driven underperformed -1% on the back of deal spread widening, especially for the AT&T versus Time Warner deal. In terms of investment recommendations, we continue to prefer event-driven to long-short equity on the back of its lower beta and investment opportunities related to US tax reform. We also maintain an overweight stance on fixed income arbitrage, a strategy that appears attractive to us in the context of rising bond yields. And finally, within low beta strategies, we continue to prefer CTAs to long-short equity market neutral. The former strategy tends to be sensitive to sector rotations on the back of its leverage positions, while CTAs are structurally more diversified in terms of asset classes traded and geographical exposure. Their long equities, long fixed income positions in November were rewarding to CTAs, and it's a strategy that we structurally prefer compared to long-short equity market neutral for risk mitigation purposes. Thank you.